Global markets begin the new week with a constructive tone as investors return from the U.S. holiday weekend. U.S. equity futures are trading higher, led by technology, with the Nasdaq futures outperforming, while copper is also firmer in a sign that broader risk sentiment remains intact. Last week's softer U.S. employment data has eased expectations for additional near-term Federal Reserve tightening, taking some pressure off global risk assets and weighing modestly on the U.S. dollar, although trading conditions could remain somewhat thinner than usual as liquidity rebuilds after the holiday. This week's calendar now shifts the focus towards U.S. ISM Services Survey, the FOMC minutes, and several major central bank events, including the RBNZ decision and ECB minutes, which should provide the next test for interest rate expectations. In FX, the dollar enters the week on softer footing after markets pared back expectations for another Fed rate hike following weaker payrolls, though the broader policy backdrop remains relatively supportive as Fed Chair Warsh continues to emphasize price stability and offers little indication that easing is under consideration. Sterling remains one of the stronger major currencies, supported by improving UK political stability and resilient Bank of England expectations, while the euro continues to consolidate after its recent gains as investors weigh improving German growth prospects against a more cautious ECB outlook following June's rate increase. The yen also remains firmly on traders' radar, with intervention risks still elevated after Japan's recent policy shift towards targeting speculative positioning rather than relying solely on verbal warnings. Commodities remain dominated by developments in the Middle East. While oil has surrendered much of its wartime spike following the U.S.-Iran agreement, the weekend served as another reminder that the Strait of Hormuz remains far from fully normalized. Multiple commercial vessels reportedly reversed course after Iran asserted control over preferred transit routes, while Tehran has now floated plans to introduce Hormuz security fees with preferential treatment for China and other friendly nations once the temporary fee transit arrangement expires. Shipping activity is gradually improving but remains well below pre-war levels, with many vessels still avoiding detection by switching off transponders, highlighting the fragile nature of the recovery. As a result, energy markets are likely to retain a geopolitical risk premium even as physical supply gradually improves. That's all for now.